Now, Mark, one thing we've heard a lot about, particularly recently, is people investing in oil and gas.
Love it.
Do you mind explain kind of what those tax advantages are?
Yeah. So, and oil and gas is not, this is not anything, we're not, like I said earlier, there's some subjectivity and ambiguity, or maybe there may be arguments over some of the charitable strategies. Oil and gas is you are taking advantage of a tax incentive in the tax code to encourage the development of energy, because the U.S. needs energy. And if you go to other countries that don't have access to ample supplies of oil and gas, look at the prices of the oil there. So you're taking advantage of an incentive to invest and help develop oil and gas industries. And the way it's going to work is you are going to contribute to a partnership, and you are going to get a tax deduction for what's called intangible drilling costs in year one. Typically, that amount comes to between 80 to 90% of your contribution into this partnership. You don't have to materially participate or really do anything at all. So I love this strategy for people who want to save money on taxes, build wealth, get cash flow, but do not want to start a side hustle. So you're a limited partner. You just collect paycheck, right? So the year one, you get a decent tax deduction, 80 to 90% of your cap contribution, and that'll offset your W-2 income as well. And then in the following years, you're going to get distributions. You're going to get a share in the profit from this. And oftentimes we find that the profit share is pretty good. I like combining this with real estate. Let's say we can't use real estate to offset our taxes. Those real estate passive losses from the depreciation can now offset the future cash flow on our oil and gas. Another thing is, let's say you're a real estate agent or you have some other side hustle, you can also offset your self-employment tax. Not a lot of people know about it. That's an extra little bonus there. So oil and gas has been a really fun vehicle for our clients to explore. And they're one of our clients is flying out to Houston and checking out the oil rigs. They're all finding this a very exciting and lucrative investment, and you're getting an initial tax savings up front to help, certainly that's going to help offset some of that risk you're going to take on, that you would take on with any investment.
So, Mark, if you do this oil and gas and you start getting distributions, is that ordinary tax or capital gains?
It's taxed at your ordinary bracket, but it's passive income, meaning you wouldn't pay any payroll or self-employment tax.
Okay, so now I guess that's passive income. So thus, wow. Okay, I'm digesting this. This sounds great. Where you get that deduction and you can deduct it against, say, your W-2. And then the income that you do receive is passive income.
Correct.
So if you have passive losses that you normally are limited to take, this will allow you to take them.
Exactly. So let's say you have these losses trapped in this passive bucket because you can't use them. You don't have real estate professional or the short-term rentals. You can say, well, hey, we invest in oil and gas. As soon as this starts generating profit, we'll activate these real estate losses to offset it. And that'll offset our profit. And we can still get the intangible drilling cost deductions, offsetting our W-2 income. So now what we always like to see with our strategies is how can we create tax savings that compound our wealth? We reinvest our tax savings into more cash flowing wealth building vehicles that can also continue to reduce our taxes.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.